Is good, YouTube family? It's your boy 100K Steez here. Yo, dropping some fire for you guys. Here's another video. This video about to be crazy though. Yeah. So let's talk about it, because I know everybody on YouTube, you see these crazy Forex flips. We're talking like 10,000 to 100,000 or 1,000 to 1,000,000. Like, I just be sitting there thinking like, dang man, like these dudes becoming six-figure traders. These guys become six-figure earners. These guys become millionaires like overnight. Like, that's wild, bro. Like, and for me, I use it as motivation. I think it helps me with my confidence. It lets me know that things are possible. But let's talk about the other side of the coin. And I mean these account blowers. What about these guys? Who's giving some love to these guys? Blowing their accounts left and right because they're over leveraging. Right? So for every one of these guys, there's at least 5 of these guys. Okay. So it's like, what do you do? How do you navigate in this world, right? You want to stay away from that. Of course, nobody wants to blow their account, but people here, they are doing it, right? Because they want to try to make this money really quick. And honestly, don't get me wrong, guys, it's cool to flip accounts, but it's just not something that you want to live your life off of. You want to become a sustainable trader that's consistent. Don't get me wrong, have a little Vegas account. That's what I call it, a Las Vegas account, where you can just mess around with it and get your whatever you need out of it, and then be done. Trading is hard as it is, let alone trying to scale an account from $50 to $100 or double account overnight. You know what I mean? And so, is it possible? Well, in this video, I'm gonna put you on game. I'm gonna tell you it's possible, and I'm actually gonna show you. So I'm gonna give you 3 fire tips on how you can actually do this the right way, using the proper leverage, using the proper risk, and actually not risking the whole account, and being very precise. So I'm gonna show you guys in this video. It's gonna be flames. I'm gonna give you guys some examples. Stay tuned, let's get it. All right, so I'm gonna break it down to 3 things you need to know and get good at. All right, so top-down analysis, like, you need to know what the overall market is doing. And that's what I say. So for me, a top-down analysis is simple. You go from the top down. You go from the monthly to the weekly to the daily to the 4-hour and so forth, right? And so you're able to put all those in place and get the overall sentiment, the overall movement of the market. And this is going to help you build your confidence, but it's also going to help you understand how to actually enter in these trades so you can actually scale it. I'm going to show you guys a quick example of how to do a top-down analysis on a random pair. I'm just going to pick one, and you guys can see how I do it. For those who don't know what it is, you're going to get some insight. And maybe you do know what it is, but it's always good to just refresh and relearn, guys. So check it out real quick. We're going to find a pair, and we're going to do a breakdown. This is going to be a top-down analysis. So we're going to take GBP, JPY, and do a top-down analysis. So what I mean by that is we're going to literally go from the top down. This is how you do it. Top down, right? So anytime there's a new month, a new week, go to that time frame. That's a little trick, okay? So it's January 1st right now. Start on the monthly. It's a new month, right? Next week, we go into the week. We refer to the weekly, daily. Let's say the next week comes about. It's Monday. New week. Start on the weekly. Refer to the monthly, but start on that weekly. Refer to that weekly, because that weekly just closed. That's the closest price action that you're going to get. You know what I mean? If that makes sense. So we're going to start on that monthly. That's all we do. We go to the monthly time frame. We identify structure. We identify like the market as a whole, but we don't do too much here because we don't want to focus on the big picture. We want to focus on the last couple months, right? Excuse me. Last couple months. So we got bearish, right? The last 2 months have been bearish. The month before that, those 2 was mad bullish. So it looks like we're coming down. We broke that low. So it's just something you're just picking up information. So the last 2 months have been bearish. Well, this is the new month, I think. So either way, it's going bearish. But the last month before that was bearish. So all we're doing is we're going for the monthly, and then we go down to the weekly. So not the 15-minute, but the weekly. Sorry. Now the weekly. we see that price has been bullish, right? Overall, it's been bullish, right? Going up, right? We're still going up. The MA is there. So we haven't really broke the low here. So are we making, you know, higher highs and higher lows still? Technically, yeah. But the last couple weeks, we had a lot of indecision here. And then we had a bullish move down, correct? So we're looking at that. So we're bullish the last 2 weeks here. We go into that daily. We take a look around. We understand the structure. We go in. We say, okay, let's take a look. We're making the higher highs and higher lows. And we started to go consolidation. And we broke down. We broke low. We broke low. We came up here, retested, right? Retested. Now we're coming down again. We're bearish on the daily, right? Just off the structure, just off the candles. We're bearish. So we go down. We go to the 4 hour. And we see we're bearish. Nothing but bearish. All right, we have a zone here, guys, that we have broken right here. Look, price has broken below this zone. We're bearish. So all you're doing is you're putting together the time frames. They don't go together, there's conflicting information. Maybe you need to reconsider. They all should go together if you're looking for a good trade, right? That's how I look for the trades. That's what I'm looking for, right? So the top-down analysis is to get you in sync with the market. And if you can't get in sync, if the time frames are telling you different things, if daily is bullish and weekly is bearish, and 4 hours bearish, but then the daily is saying something else, whatever. All I'm saying to say is, anytime that you have conflicting data is when you need to reconsider. You need to sit back for a bit and just digest the market, or let the market move a little more and give you more information on where it's actually going to go. You kind of don't know. You know what I mean? So we would keep going down further. I wouldn't go any further than the 1 hour to figure out what's going on, because after that the other time frames are more execution and fine tune. You know what I mean? You don't want to go on to 30-minute, 15-minute and try to figure out what the market's doing overall, right? So that's a top-down analysis, guys. Very, very simple thing to do. Like I said, top down. And if you do this every time through every pair, you'll learn the pair, you'll learn and understand the pair, but you'll also always have the right information in the right order. That's a big problem with trading. When you have all the information, but it's not in the right order. So, top-down analysis, that's how you do it, guys. Random pair, like I said, it will be. And, that's how you do it. Identifying momentum. So, what does that really entail? So, to basically sum it up, since I don't have the whole video, I really could do a whole video on identifying momentum. Honestly, guys, drop a comment if you would like for me to do a video on identifying momentum. I can break down every piece, show you guys multiple examples. But yeah, put that in the comments if you guys are interested in that. But long story short, identifying momentum is simply looking at the candles and seeing what it's telling you. Are you getting these big seller candles, these long candles with short wicks? Are you getting multiple candles going straight down? You have to look at all that together on different time frames too, 5 minute, 10 minute, whatever. You put it all together, and that helps you identify momentum. It helps you identify the movement. Or maybe you get a candle that's selling at first, and then near the end it comes all the way up and leaves this big wick at the bottom. I call it a fishtail. I'll show you a quick example. But that's stuff like that. You have to pick up on all that stuff. And so by identifying momentum, you're able to really scale into the trade and tap in, so you're able to actually make it make sense. We are looking at the candles, we're identifying higher highs and higher closes, or lower lows and lower closes on the candles. All that goes into consideration when you're identifying momentum. Structure-based risk management. So I know you haven't heard that before, because I made it up. I made the term up. It makes sense because I'm gonna go ahead and explain it for you guys. This is gonna be the third point. This is very important because this is what you're doing. You're using structure-based risk management while you're actually in the trade, live, when you're placing entries, when you're re-entering, when you're trying to scale into the order, right? This is when you use the structure-based risk management. And so what that is I'll give you a perfect example. If we're selling the market, right, and we come down, we make a leg down, and then we pull back, right, and then we come down and break that last low, now we can place our sell orders, right? Where does your stop loss go? It goes right above that high. Boom, boom. So now you're following that structure. You're on the 5 minute or even the 1 minute. I can scale on the 1 minute. and you're just looking at structure. Sometimes it can be a candle. Let's say the candle breaks the low, put your stop loss above that candle's wick. Structure based. So I'm gonna show you guys some live examples of actually how to do this. In this case scenario, this is a small account that I went ahead and just put some money in. It's like $30 real quick. And I wanted to, the reason why I did a $30 account is because I wanted to show you guys like anything is possible for all those out there that are trying to make something happen. Like, yo, you can make it happen, bro, with a small amount. So if you have the skill, that's all you really need. So check this video out real quick. Tune in and let me know what you think. For this live, because what's happening right now, we have all these entries, right? But what are we thinking? Like, what are we thinking, right? This market is pushing up high right now. Am I gonna get out these trades? What am I gonna do? And this, like, keep in mind, this is a small account, so I'm trying to flip this account and being aggressive with it. But at the same time, let me just show you actually. Let's see. Okay, so we're up $1, right? We have $30 in here. Look at all these entries that we have, right? And so what are we doing? We're just following the market. We see this level here. So I was recording all these entries that I was taking. And right now we have a level where we're trying to break. Pretty sure it'll probably break. But we also have a level here, right? Let's keep that there, sorry. We have a level here of resistance as well. So it's like, what do we do? Do we hold? Do we hold all the way up to here? Hopefully we let it roll over here. That would be great, but I don't know. It looks very strong. So what do we do? So this is really where trading really matters. It's like, okay, handling your risk, understanding what's on the table, you know. Look at all these entries here. Do I close some of these out? You know what I mean? Do I assess my risk differently based on where this thing's going to go? So with that being said, we're going to go to different time frames. We're really just trying to get an idea where it could go. And yeah, it looks a little messy, but if you guys see closely here, we have a wick. We're going to get rid of everything so we can just really be in the game, because the thing is pushing pretty hard. But at the same time, I have a feeling that we're really going to just kind of melt down, but we'll see though. We really can't tell. But anyway, I'm on the 30-minute here and I see this wick. And so that's interesting to me because we have about 10 more minutes before this candle closes. So this is very important. If this candle closes as such, then I have to consider maybe, you know, closing some position, you know what I'm saying? So with that being said, you have to have that mentality. So right now I'm just watching it. I'm not making any decisions because price is still pushing in my favor. But at the same time, I am considering, as you can see, price keeps coming up. I am considering figuring out that, hey, look at this here. At 10:30, if this candle closes like this, I need to consider closing out my trades because this is definitely, you know, something that would signal a bullish move, right? Look at this. So, with that being said, I probably would have to go ahead and close because I have too many positions open according to my risk because I'm looking for momentum, not looking for, you know, drawdown. So right now we're getting this higher high forming, and then this higher low forming, right? So right here, higher low. So right now we're like, okay, we need to close this out. We're still in a little bit of profit, which is great, which means I'm just managing the risk. But we need to close this out soon unless candles kind of start pushing to the downside and break all the structure on the 1 minute. Hey guys, so I want to record this because I've been recording this trade all night. And so just trying to keep everybody up to date. So we're literally just scaling into this trade, and trade is just going, right, guys? We got so many entries. We're up $30. So the account was at $30 and we're up $30. So we basically doubled the account already, and we're gonna keep holding these trades. And so yeah, we're just looking at the market, and so as you guys can see, I'm entering on every pullback. I really scaled in at the top here, in this area up here, as you guys can see. But yeah, we followed price action. The momentum was on our side. Every time it pulled back, we entered. Pull back, enter. This broke, closed here, so I entered. And so we're just keep going. Like, as you guys can see, the structure is clean.
We'll probably get another pullback here, take us back to this, and then we can keep going.
All right, family, so that is going to be the end of the video. I made this video to showcase you guys the skill. The skill is scalable. It just takes confidence, it takes practice, it takes back testing, and it just takes a lot of hours to actually perfect. But like I said, the skill is scalable, guys. The same 30 to 60 can be 30,000 to 60,000. It's up to you guys. So without further ado, that's going to be the end of the video. Like, leave a beautiful comment, maybe some opinions, anything that you guys think that someone needs to hear, or maybe you guys have some feedback for me. I would love it. Other than that, of course, subscribe. I'll see you guys in the next one. Peace.